Okay, so the first thing we want to do is to analyze the daily and still get the overview of the market. So we are bearish here. We have a breaker from this high, these down candles, then when the high here, or also this high here, and this becomes a breaker. We didn't get to the breaker here, but here with the buy side liquidity pool. So we will look at this week here for some details about Asian range, DTCC, and the cycles. So I will put my annotations in it. And now we can see we didn't hit the breaker here in this week, and we dropped down, had a consolidation on Monday, also on Tuesday, and then we knew, okay, we still have the breaker, we might hit it, and Thursday might create the high of the week, and we get it. So let's stay in this week here, the 15 minute. As you can see, both are bearish here. On the 5 minute you can see it better. And we still have a bullish day. That might happen, of course. If you have like this pattern here and you expect a bearish day, then you need to look at what is the previous chart telling you. So we have a breaker again with a value gap. So this might be the draw, and then you might be expect a down move. But we still have a bullish bias for the week, and Monday might create a consolidation. So you wanna line up your PD arrays, and here is the breaker. And then you can get a better view. If I go to the 5 minute, this one closed bearish, at least on the 5 minute. And if we have like both bearish, but also I do not want to use the Asian range from Sunday that often. It's not so much high probability if let's say it's not high probability like the other days, because it's Sunday. But if you do expect a down move on the day because both are bearish, but the week is telling us to go higher into premium arrays, then we only take the DTCC here, and if it's bearish, like in mixed patterns, if the Asian range is bearish and the DTCC bullish, or vice versa, then we only take the DTCC, that one is bearish, and we want to see then a bullish day, so the opposite of the DTCC. So you can erase the Asian range for that, and we do expect a bullish close on the day, at least a bullish move if we are below midnight opening price for New York Open, or if we are above midnight opening price for New York Open, then we expect a continuation, and that looks like that. So we have midnight opening price, and in the New York Open kill zone from 7 to 10, we are still above the midnight opening price. So what do we expect? We expect a continuation. If we were below the midnight opening price, then I actually expect a reversal most of the times if we still have a discount array. So we ran higher, then drop down. We have a bullish order block here. We have old highs. We have a sell side liquidity here, and then we drop into that. And if we go even further, then we can go into the cycles. I can drop some lines here for the cycles. Just like that. So mostly I use the first 5 cycles, but for late New York Open purposes I use the 6th. So let's go to the 1 minute. Okay. So we expect a continuation in New York, and we have that low. We drop below this low here, and then we want to see it going higher because of the DTCC bearish, and we want to reverse. Actually, we want to reverse it. And if that happens, you can expect a pattern from the DTCC inside New York. So the same, it moves like here. It might move in the New York Open as well. But this is a consolidation. I do want to see a DTCC as a impulsive move. So it should either go down or up, like a move like this here, like this one here. But here we have a consolidation. So I stick to the rule that we might see the opposite of the DTCC. So we have a low here. We take the low out. Then wait, that's not right. Yeah, that one. The Fib time zone tool is for getting the kill zones. So the bigger ones, the 18-minute kill zones. Between it most likely is for me to view it like a London lunch. So I do not wanna get an entry in it. But so we have a low here in the kill zone here, as you might expect. Then we want higher, and in this kill zone here we wanna enter. And I see 2 setups here. The first one is we have a fair value gap here with a breaker like that. So we have this pattern here. This is the breaker with a value gap. So I can do it like this. And the most high probability trade then is we drop down into this kill zone here. The kill zone starts, sometimes you see me on YouTube entering in the first candle of the cycle. It happens a lot that the setup occurs in the first candle. So I do not enter here. So I do not enter here because I expect to enter inside this kill zone here from 0.47 to 0.67. So when this candle opens, I enter long to get these buy side liquidity here and this buy side liquidity here, and then I expect a draw either in this same kill zone or in the last one. If I get a draw in this kill zone here above these highs, then I wanna go out of the trade and close it entirely, because most of the times if you enter in this kill zone and then the draw happens in this same kill zone, then it might turn and stop you out. So my rule is to enter here. If the draw is in the same kill zone, then I close it, I take full profit, and then I let it run, or I trade in the next cycle. The next or the other setup is here. So we have an OTE, bullish order block, and a fair value gap here. Yeah, this is a fair value gap. and we have a bullish order block, and then you can enter here to take out the high here on this cycle, or to actually take out previous highs on the cycle. So that one's a high. Let's see, didn't get it there, but we did here. And this is also a kill zone. So if I take the next cycle for London close purposes, and I draw flip time to it, then we can see in this bigger cycle, in the bigger kill zone, we have the liquidity draw on this cycle. So my rule here is to have the entry inside the bigger kill zones and the draw on the bigger kill zones. That is for me the high probability. You could enter here below these lows with the turtle soup, or you just wait to have a market structure break here, then wait for the cycle here, enter on the first candle if that is a proper setup, or wait for another setup here, the OTE bullish order block, and then you can run it higher. So we had no liquidity draw here, only on this high. Then we had a small consolidation here, and then we do expect another draw, at least on these equal highs here on the London Open, on the mini kill zone, of course, the first mini kill zone, the bigger one. Okay. So on the 15-minute again. Okay, so this was on Monday. Then the Asian range and DTCC for Tuesday. Both are bullish. We might expect a bullish day. It almost provided a bullish day. But we only need the context. So we had a move higher in London Open, then sloppy price action, drop down into London close and drop further, and then we might expect a bullish day, and we might expect a bullish close. So we still have to view this as, okay, we need a bullish move if we are below the midnight opening price, because the rule is to expect a bullish move. So if we are below midnight opening price and we have both are bullish, then we want to see a bullish move at least to midnight opening price or above midnight opening price. If it closes above or below, that might not matter, because we only need a range to operate in. So yeah, we have a move higher here to view it like this, below midnight opening price, but we get into the end of the day and we still expect a move higher, because we might get to midnight opening price again, or we close it there. So if we are in London close and we have a reversal here, and we have a market structure break on this one, this high here, swing high, then we can expect a trade at least to midnight opening price. At least. We had a one below these lows here, and with our context to view the day as bullish, we can expect a reversal below midnight opening price, get a market structure break, and then run it higher. So in this, you can actually get a lot of trades, even in 18 range, to get back to the midnight opening price. And the full take profit should be here at midnight opening price, because the day can still be bearish or close bearish. So we have no reason to be above midnight opening price, because the only thing we need is to get back to midnight opening price. Because of this range, we need a bullish move, and we can expect it because we ran a low, had a market structure break below midnight opening price, even if it's after London close, and then we can run it higher. So here we have a mixed day again, bearish DTCC, so I actually wanna see a bullish move. That's my rule for mixed days. Bearish DTCC can be a bullish move on the day, at least in New York Open. I wanna focus on New York Open when I only use the DTCC. So DTCC here, we can actually use the high, the low, and the middle of the DTCC for support and resistance purposes. Like the high, the low, and the middle are key levels for the day. So first, we have a bearish DTCC, and we have we are here in New York Open. I wanna focus on New York Open, so watch closely. We have a midnight opening price here. Like that. Then in London Open we drop below midnight opening price, run higher, consolidation. Then we are in New York Open. New York Open is here to 10, and we drop down in New York Open. The first thing is I wanna see the opposite of the DTCC on the day. So the day must be bullish for me. And if we are New York Open above above midnight opening price, then I wanna see a continuation. We got the continuation into this high, and then drop lower again below this London low, and then higher. That doesn't matter for me, because I still have a bullish move. I still have the opposite of the DTCC in New York Open, and I only use then this high for full target purposes, because we ran this high, and then we run this high for liquidity purposes, and we might have a high here. We didn't get it there, but on the day we got it. So if I drop my cycle lines, 8, 9:30, like this. So this here is New York Open, and 11. Alright, go to the 1 minute. So we have our cycles. I then put my fib, and as you can see, the best moves, they happen inside, or the best reversals, they happen inside this kill zone, 0.47, 0.67. Actually in this as well. So we have a bearish DTCC. We are above midnight opening price. I do want to see a continuation. If we were below midnight opening price in New York Open, I then expect a reversal inside New York Open to then get at least to midnight opening price, just like here on the previous day. Okay, so this cycle here, you can actually use this as a low, New York Open, we then have a market structure break. We go higher here, had a consolidation, higher again above these highs. Then we have equal lows here, we have fair value gaps here, and you can still use the last bigger kill zone for entry purposes. If the middle kill zone, the 0.47 to 0.67, gives you the setup, then you can expect an entry here. And then you just run these highs on the cycle and the high on the previous cycle. So as you can see, in the bigger kill zone, I do want to see my entry, and I do want to see the drawn liquidity, as we can see here. So the entry might be here, or you wait for the next cycle and enter in this 0.47, 0.67. As you can see here, we have an institutional order flow entry drill. And what candle is this one here? It's the second candle of the 1 minute inside this kill zone. So you get an entry here with an institutional order flow entry drill, because we have a fair value gap created. And then we expect a move higher. We expect to run these equal highs, engineered equal highs here. We expect to run this high on the previous cycle, and we expect a bullish move because of the bearish DCC. So you can enter here, get this move, and get out here, because same thing. As I said earlier, if we enter inside this cycle and we have a draw in the same cycle, I do want to close my full position here, because then we can expect a reversal or a deep turn. And we got it here into this cycle, into this mini kill zone, then another reversal and consolidation. So this was the setup with these equal highs and this high here. Okay. And then it dropped lower below mid opening price and then went higher again. That's no problem for us, because we still got our setup inside a cycle. We still got a bullish move also in the New York Open time, and that's what we need. But the point here is we have a DTCC bearish, and we do want to see a bullish close for the day, because we have mixed range. Then below midnight opening price, below this low here or these equal lows, you can expect a turtle soup. You can expect a turtle soup because we are below midnight opening price and we have a bearish DTCC. What gets us to view the day as bullish, because it's mixed. So the Asian range is bullish and the DTCC bearish. Then we focus on DTCC. So we drop down below midnight opening price, had a turtle soup here, and then we might expect reversal at least to midnight opening price again, but of course higher, because we are bullish on the week and we still have premium arrays on the daily chart. Okay, the next day both are bullish. We still have premium arrays on the daily chart. We might expect a bullish day or bullish close. So this is the most high probability for me. Drop a line on midnight opening price. Both are bullish. We are New York Open, can expect a continuation. And we still have premium arrays on the daily. This first line is a buy side liquidity pool. The second one is the bearish breaker. We have a close bullish. That's good. We can drop our cycles to 235. The first two cycles represent the London open kill zone. And if we have like this and the DTCC is also bullish, and we do expect a bullish move into a premium array or London close, then this pattern here might be the pattern for DTCC, for New York Open. The DTCC from 8 p.m. to 8:45 might be the pattern for New York Open into London close. So if we drop a line in for the cycles, just like that, we have a move higher. Our New York Open begins here. We have a move higher, then a little consolidation here, another move higher, a little consolidation here, and another move higher into London close. So the pattern here is to view it like this. This small retracement, and higher. Actually, to this one. Then I take this and we drop it to the move where it begins. Like this. Small retracement, and move higher. Actually to the premium way. So this is the pattern. So I have the confidence, if we go higher, to then know we do not might see a turtle soup, because in the DTCC we had no turtle soup. We had one higher consolidation, and the final one into the premium arrays. Okay, so then we go to the 1 minute chart. And here in this kill zone, or in this cycle, we have a drop down here, and the reversal is actually inside the dead time, so the time window after the bigger kill zone I prefer. That's no problem, that's alright, but let's begin on the first cycle. So we dropped down, had a Judas swing for London Open. We still expect both or the day as bullish. We have liquidity here on these equal highs. So for the first cycle, we want to see a liquidity run above these highs. We already had the move down into London Open. Then we have a market structure break. You can actually enter here and on this kind of institutional order flow into drill. But if you want to wait for the bigger one and we didn't get these equal highs, then you can enter here. So the pattern would be, let's see if this one has a fair value gap. So you can enter in the fair value gap here. This one. And yes, as you can see, we traded once, twice, 3 times, and then went higher. We got the liquidity draw inside the same time window. So I do wanna cut all my profits and take the trade completely out of the market. This is only a small scalp, but it might still get you to 1-to-2 risk reward ratio. Yeah, at least 1-to-2. So 2 would be here, but we have these equal highs. Can actually go for 3 pips here, and this would be the trade. For the next cycle, as you can see, bigger kill zone. There's the reversal. we have equal highs here. So the high in the Asian kill zone. As you can see, the draw is again inside this window. So I do want to see an entry inside the bigger kill zones or the draw inside the bigger kill zones. We have a breaker. We have a fair value gap. And we have our first kill zone. We still have equal highs here. And then you enter here in this kill zone. You can enter on the value gap, the high. And your draw on liquidity is inside the same window or in the bigger one. So the first target would be these highs. Take a little bit off here because the setup is in these in this kill zone here, and then the draw is in the same kill zone. So you wanna take something off here, and then let the rest run to these equal highs here, into the bigger kill zone here, the 0.74 to 0.67. Sorry, 0.47 to 0.67. And then you have a decent amount of reward here. So that's how I use my cycles. Let's see what we got here. With consolidation here only, we have the New York Open, and we do expect the pattern of the DTCC, so we can actually run this higher into the premium array. We have consolidation here, so we drop a fib here, and then we only focus on the bigger kill zones. So we have an entry here, we have a bullish order block, and here equal highs, that's no problem. We have the order block, we have a old high, but you can also wait for the market to break on this kill zone. We got it. Consolidation, and at that time we do not want to trade in here, and then we take out this high here. So this is a smaller breaker, this one. And we drop down into the breaker, go higher, drop down into the fair value gap, institutional order flow and 2-dual. Here we go higher, another fair value gap, same cycle, 1, 2, 3 setups. Do we have a old high? Not in the last 3 cycles, so you do wanna take something off above each new high, or just let it run to the premium array. And this kill zone here, we can trade it, we can have an entry here, but we do want to focus on the first 2 bigger ones. But if we take this fair value gap here, we still have an entry here. And for another cycle, for the London close, we do want to focus again on the bigger ones, and we get closer to the premium array. So we can enter here inside, let's see, inside this bullish order block. Here we can wait for take out these highs here to have a market structure shift again. Then we have retracement here in the dead time, that's no problem. We run higher. Actually you can trade on the first candle because we have a breaker here, this pattern breaker, and this candle you might expect a move higher, because we already have the breaker. The first candle, it opens inside the breaker on the top end of the breaker, and then you expect it one higher, or you use this as an entry. You have fair value gap here. You can go for an institutional order flow entry drill here, or you wait for deeper close. We have no fair value gap here, so this might be the entry. Run it higher again. In this kill zone you can enter, but it's not necessary because we are still so close to the premium array. Alright. Then we expect a Thursday high of the week, because on the 1 hour this is our week. And then we have for the last day here, good example is as well for the DTCC midnight opening price. We have a bullish DTCC and a bearish Asian range, so I do want to see a bearish day because we have a bullish DTCC. And then we just use the DTCC but the opposite of it, and we can expect a pattern from the DTCC. The pattern might be the same direction or the opposite of this. So if we have a pattern like this in DTCC, we run higher and then it retraces just like that. Can copy it, and then we just have the opposite. This must be higher. So just like that. The New York Open starts here, so we have a drop down, and the rule here is to view the DTCC as bullish, so we expect a bearish day. We might get the continuation in New York Open, but it can go higher to at least midnight opening price and then closes here below midnight opening price because we expect a bearish day. We have equal highs here, equal lows here. Sorry, equal lows here. So when we are here in London Open and we drop down and we expect a bearish day, then we can expect a continuation from London Open to New York Open into the drawn liquidity. Then we can drop our cycle lines to 3:30, 5, 6:30, 8, 9:30, 11. So these are all the cycles I use, but the first 5 are my main cycles. So we can go in the 1 minute. And let's see. First cycle, we have a Euler swing above midnight opening price. Then we have a market structure break. Here, market structure break. Then go higher again. We can expect, we actually can trade this candle here. I do wanna, so this one is for me inside this kill zone, and you can actually trade this fair value gap. Even if the candle starts at 3 AM, what starts the dead time, it's still on the line for this cycle or this kill zone here, and that might be a entry for me. So we get into this fair value gap, then drop down. We have a fair value gap here, so, and a mitigation block, so we can expect this inside the bigger kill zone as an entry. and we have lows, equal lows here, and we have a draw inside the same cycle or the same time window. So my point here is to view the bigger windows as an entry or an entry opportunity. You want to start some setups. You want to see first the DTCC and the 18 range. You want to have the context of the daily chart of the bias, and then you can actually trade it like this and get as many trades as possible inside the bigger kill zones. The draw should happen inside the bigger kill zones as well. So with a draw here, actually here on this one is the draw on the bigger kill zone. Then we enter the next cycle. We have a key fair value gap here. We have a max structure shift again, and we have the OTE from this high to this low, and then we have an OTE 0.62 here, these levels, and then we can expect a short inside the 0.47, 0.67 time window, get lower. And we have, let me see, we have equal lows here, we have equal lows here, just like that, and here. And as you can see, the draw on these equal lows is not inside the dead time, it's inside the bigger kill zone. Alright. Then the next cycle. We still have a level here, the equal lows, and these equal lows here. So yeah, we do not need this and this. So we have small ranges here. Still a opportunity inside this time window. We have a fair value gap here. We have an alt low. So if you want to trade, if you actually want to trade this, your stop might be above this high, 3 pips, and the target would be this. So you have a setup inside this window, you have a draw in this window, you want to close your trade entirely. Then the next cycle, we have consolidation here. We have a fair value gap here. So let's see if we have, yeah, we have a market structure shift below this low here. Even if it's only a pipette, we have a fair value gap, we have an OTE inside the bigger kill zone. If you train your eyes for the bigger kill zone, for only this one, trust me, you have insanely good entries. Some of your trades might be going to stop loss, or it might range a lot, but that's no problem. The most of your trades are highest probability because you are entering inside the 0.47 and 0.67 time window. I backtested a lot, and I backtested a lot of these windows, and the middle kill zone, the 0.47, 0.67, is the most or the highest probability time window for my entries. And the other bigger kill zones and also the 0.47, 0.67 is a window for also my targets. So the windows in between, like the first one here, this one, and this one, I do not touch any of these time windows. I wanna prefer the bigger kill zones. Okay, so we have our line here. We had a smaller liquidity draw, or a liquidity one here. If we take our fib again, as you can see, the best moves and the best entries are inside the middle, in the middle of the cycle. So the second bigger kill zone. You have a low here. You have consolidation. It goes lower. We have no institutional order flow into drill here, but another drop down. This on the smaller time frame maybe is a bearish order block, and then we ran this low. I hope you get the point. You still have to view the market in the daily chart, in the 1 hour chart. So if we are here, we have a bullish order block here, and we might expect a bullish move into premium arrays. Also, I expected a bullish move because of Euro GBP. As you can see, we had equal lows here on the daily. We ran lower, then higher, had a market structure break, tapped the fair value gap here, tapped, this is on the weekly I think, but here is a fair value gap in the daily. We run lower inside this fair value gap here, and the bullish order block. And then I'm expected to get a bullish Euro GBP inside here, from this point here. So that's why I expected this as a bullish move or a consolidation. But I wanted to have a premium array on the on the daily chart, and we have a old high here. So that was my market view on the daily. On the 1 hour we had a consolidation here, market structure shift on Tuesday, then deep run into this low, then higher Wednesday continuation below midnight opening price, one higher Thursday, high of the week, and then here, as I explained why I saw this as a bearish day, DTCC was bullish in a mixed pattern. So inside this Asian range bearish, DTCC bullish, I expected a bearish move because of the opposite of DTCC. So this is how I personally use my cycles and my DTCC. I hope you enjoyed the video, and if you have questions, then just email me. The email is inside my video portal. On the left there's a button with my YouTube and the email, and there you can just click on it and then you can send me an email. Yeah, that's it. I hope you enjoyed it,